What is up, everyone? Welcome back to the Eat Sleep Profit YouTube channel. Now, before we jump into today's video, I'd like to give a lot of thanks for you guys. You guys have been throwing a lot of love, a lot of likes, a lot of subscriptions into the YouTube channel. So especially just motivates me to keep doing videos and keep doing videos like that. Because at the end of the day, it takes me multiple hours, sometimes multiple days just to get a video out, because I do all the editing, all the animations, all the video recording. I'm kind of like a one-man team. So at the end of the day, I really thank you guys for especially dropping a lot of love. Now, in today's video, I want to go over some live trades that I've taken and kind of break down a lot of techniques and processes that I do. So for example, some of those takeaways, you guys can get that and apply that to your trading and see if it helps, for example. So maybe one of you guys out there, you're watching this video, it helps, so you turn your trading around. That's the end of the goal. So I spend hours and hours editing videos. Hopefully one guy out there, it helps your trading and you on to the road to profit. So it's Eat Sleep Profit for a reason. Hope you guys enjoyed today's video. Now, the first play we have here is OTLK. This was on May 17th. It was a Friday, so usually the Friday is a little bit slower because a lot of people don't look to hold for longer periods of time over that weekend. Now, this was a pre-market high break setup, so I usually have a defined level in the pre-market high, and then I look for that stock to break through that in the intraday, usually not very, very close to the morning, but as the stock progressively sets up. The pre-market high was somewhere around 225. So especially with this stock here, usually what I say, if I want to anticipate a break of a pre-market high, I want to see good volume, especially as well as I want to see a good smooth trend heading to that point. And that gives me the confidence to anticipate in most of those moves. So looking at that, seeing that stock looking to head towards that, I look to buy into that trade. I'm going to be risking off of that nearest level of support, which is somewhere around like the 205 level. So with that, as this price action is going forth, I usually give myself a defined level of entry and then risk level as well. So my entry was 221 and I'm risking somewhere around 2.1, a little bit above that nearest level of support there, but as well as looking at good trends that head towards those levels of resistance, like the pre-market high breaks, give me a lot more confidence that the trade is going to follow through. And as you can see here, it does follow through very, very well. Now, when it comes to sell these trades, you can usually utilize like a normal percentage target when it comes to sell. Now, sometimes what I do is I utilize a percentage target like between 6 to 8%, and as well as I will only sell half my position at that point. So with that, I lower my shares to 2,000 shares, and then I'm looking to sell my first 2,000 shares somewhere around that 2.4 level. So at 2.4, that's a good point where I know a lot of people will start to sell at that level. Most traders are going to be the same. They usually aim for around the same amount of targets from breaks. So usually anything between like 6 to 8% past the break point, there's usually going to have a lot of sell-offs in that point. So especially as this price action goes forth, you can start to see kind of that pushback that's going to happen at that 2.4 level. Now, sometimes if a stock spikes super quickly above your sell target, limit sell target, sometimes it may skip over it. Some people usually panic in those situations, but a lot of times if it skips over your sell target, you're going to actually have more profit on top, because if it goes higher than your sell target, technically you're in more money. So sometimes I'll move it up a little bit just to execute that. Now you can see here, the stock starts to pull back from that point. Usually whenever I have a half position still holding, you can see I still am holding 2,000 shares. I give myself a floor of my entry price where I'm willing to hold that last half. So the last half can't go anywhere below my entry price before I cut it. You want to sell the first half for a profit and sell the second half usually for a consecutive profit. If not, you can sell that second half at your entry price and just cut the trade. Now, this stock really starts to grow after that point, after that little lull that happened there. And then I'm going to be looking to sell the next half into the second spike here. The logic behind the multiple selling points is usually the first spike isn't going to be as far as the stock wants to go. A lot of times these stocks want to breathe. So you can see I sold that second half at around 2.7 and ended the day somewhere around 1340. So that's on the higher side of profit I usually see. Most of the time I usually see an average around 500 to 600. So something like this, I don't say that it's hard to replicate, but something like that, it doesn't happen so often. So don't look for $1,000 profits every single day. Look for those consistent 400 to 500s, and they're going to add up at the end of the week. So the second play we have here is actually the same stock, OTLK, but this is the next day that it's set up. Now you can see here, this stock is setting up pre-market high break, good news behind it, volume starting to run. Now the situation here is the stock is breaking out right in the morning, right as the stock is opening on the day. My number one rule is never play the first candle, because a lot of times that very quick looking buy action can quickly turn around and turn against you, especially as people look to sell from the previous day. They're holding position from the previous day, stock gaps up, they look to sell in the morning and can quickly go against you. So especially on this position, I waited for a trend to develop. So I saw like three or so candles of higher low action before I wanted to jump into the trade. Now I'm somewhere around the breakout point is around $3 per share, and I entered into the trade around 318. So this is a higher risky trade here because I'm buying 18 cents above the breakout point. A lot of times I want to anticipate, but certain positions I may just say, okay, let me try to confirm the trade as it goes higher. So I set my sell target for 3.4. I wanted to play this stock very, very conservatively because I knew that it's running very, very quickly from the breakout point. So you always want to measure your profit from the breakout point a lot of times, just to show how far overstrung the stock is. So you don't want to have no unrealistic targets at play. So this stock really doesn't get to that point and it starts to pull back here. So when it comes to saving yourself in the case of losses, I usually go from, if the stock is in profit, I have a sell target. If the stock goes against me, then I'm in account protection mode. So stocks can swing against you very, very quickly. This is just the nature of playing these styles of trades, and especially very, very early in the morning. Now, if you had a normal hard stop, a hard stop loss order, it would have tripped at whatever price you set it. So let's say if I set it at $3 per share, it would have instantly tripped at $3 per share, exiting you out of the trade. So you would have lost, let's say, $500 or so. Now, a lot of times stocks will take very, very quick dips and then they will bounce off of those. So especially if you're in a loss and you don't have the confidence to hold the trade anymore, a lot of times I may sell after a bounce is developed. So I'm not using a hard stop, I'm using a sell limit order to exit me out of the trade once the stock is against me. This takes more discipline and finesse. I wouldn't say this is something for beginners, but this is something that I utilize. So a lot of times if a stock quickly goes against me, I'm not right there trying to smash the sell market button and get screwed out of my price. Sometimes I'm willing to sit there, wait for it to bounce back up, but you can't hold too long if it's going against you because it can really start to spiral out of control. This is a technique that I would say you need to practice before you want to utilize there. So especially once the stock can touch that order there, I jumped out of the trade with a $400 loss. So I do take losses, unlike a lot of people say I always show profits. I do take losses here. You can see those. But at the end of the day, especially if this stock was to quickly go against me and I had a hard stop, let's say at like the 280 or 290 level, it would have quickly touched that point, and then I would have jumped out of the trade with a very, very much larger loss, and then never had the ability to at least make a little bit of that profit back. So I utilize that strategy sometimes. You can see that if I wouldn't have exited that trade, even though that stock bounced back up a little bit, it kept on going even lower. So a lot of times when the stock goes below its opening price, it will really, really go down and really pull back very, very hard because the stock is going to be a red candle on the day. So that's one little other stock that I played. I took a loss on it just to show you guys that. But at the end of the day, we're still ending the week out on the green point. So that's always what matters. If you want to calculate profit for yourself, don't look at daily profits, look at weekly profits, because that usually shows you if your strategy is working good or not. So here's some good tips I want you guys to kind of get from this video here, and I kind of want to just lay them out. Number one is never buy stocks right out of the gate. So that's kind of what messed me up on especially the second play that I went after. I'm still kind of very, very early in the morning. A lot of times I like to at least let sometimes around 5 to 10 minutes pass so I can see if the stock can really hold their trends very, very well. Turned out that stock couldn't, as well as especially the first candle, which is like the ultimate no-no. A lot of stocks will be gapping up from the previous day. So just remember, there's people buying into the stock the previous day. And if they wake up and their account is up 50, 60% overnight, they're going to be very, very high tendency to sell out of the gate, which even though the stock may be setting up a nice pattern in the pre-market, it can easily go against you. So that's one thing to watch out for. Number two, oversized positions. So a lot of times, especially if you're first starting to get into the markets, you want to make as much profit as possible. I mean, at the end of the day, money is going to be the main goal here. But to get to that point, a lot of times, if you're first starting to live trade, the emotions get involved. And one way to especially get over emotionally involved into stocks, especially if you're putting a lot of money on the line. So what I did, especially early on, is I tend to scale back my positions into something I'm very, very comfortable with. So especially once I buy into the order, I'm not very, very scared of every little candle that goes up and every candle that goes down. If you can start to trade with a clearer mind, a lot of times your plan is going to be much better working out than especially you're oversized into a position. And anytime the stock slightly pulls back, you're very, very scared and you're ready to sell. A lot of times you're not going to be able to hold trends very, very long. And a lot of times you may jump out of a trade prematurely before it really starts to run. So never oversize, only trade with a comfortable size position. Now, number 3, I like to sell into multiple points. We call these half positions, or especially just scaling out of a position. What this is usually going to be based on is, first off, your first guess of where the top of that stock is, which is usually whenever you sell a stock, you're saying, okay, this is going to be the topmost point that the stock is going to go. I want to exit at this point. Most of the time, you're going to be wrong doing that. A lot of times the stock will continue to go further, but it's real live trading. Hindsight is always 20/20. So at the end of the day, what I like to do is I like to keep myself open for, if I'm actually wrong, I'm going to continue to ride this trade even further and still have shares on the position. So if I buy 4,000 shares like I did in the first trade, I sell initially 2,000 at my desired target and let the other half ride. I let the other half ride until a point where either the stock hits a lot of resistance at that point, or if it spikes up way too quick and I know a pullback is imminent, I might as well sell while that stock is ahead. So sometimes you can kind of predict that in a certain sense. If a stock spikes up way too fast, just know that a pullback is really imminent. That's what happened on the second play that I went after. Now, number 4, look at the daily and intraday charts together. So this is what I did on both trades that I took. You see that I look at the daily and the intraday charts together. So a lot of times what will stop me from buying into a position is, especially even if the stock is setting up a very, very good intraday setup, if the daily chart candle is red, that's a very, very bad sign. That's usually a setup for short sellers. So a lot of times I won't take those positions, as well as resistance levels that set themselves up on the daily chart usually hold true into the intraday as well. So you really want to make that correlation between those 2 points. But these are some very, very good tips you should utilize into your intraday trading as it goes. So I hope you guys learned something today. It's a little live trading action. I want to get especially more regular videos out. So it may not be 30-minute videos, it may just be 10-minute videos, but if I can get these out multiple times a week, this is going to be very, very good. And a lot of times you guys are going to benefit from that. So at the end of the day, this summer, let's break through those goals. You guys have those goals of, let's say, breakthrough, let's say double your account, 25K PDT, 100,000, 500,000, whatever. Let's work to get you guys to break through those goals. So I'm your guy. This is Jay from EatSleepProfit. Hope you guys enjoyed today's video. Peace.